Welcome to Morningstar. The escalating interest in ESG funds continues in earnest, with the excitement of fund providers and a growing number of funds investing in causes like climate change and biodiversity. Investors should not overlook the risk of greenwashing. As the Earth Week is around the corner, we are asking Brian Chung, an associate director at Morningstar and a member of manager research team, to tell us what is greenwashing. Hi, Brian. Can you tell us why should investors understand greenwashing?
Hi, Kate. Sure. So in the context of mutual funds, greenwashing means a fund with an ESG focus is not really walking the talk, such as exaggerating what it does on the ESG front. And for illustration, let me give you a more extreme example. Say there's a thematic strategy that focuses on renewable energy companies, but then it invests heavily into traditional energy business, which could be a signal of greenwashing. And another example would be that there's an equity strategy that claims to integrate ESG into its investment process, and we utilize active ownership practice, such as engaging the company management to drive changes in the companies. But then if there's a lot of churning behavior in the underlying holdings, this could also suggest a risk of greenwashing because driving changes in companies tend to be a long-term process. And this is important for investor to know because one is a misrepresentation that can mislead investors. And second, it can undermine the credibility of ESG investing and ultimately the chance to mitigate some of the pressing ESG issues.
So let's move on to fund selection. When we search a fund, how can we ensure or at least know better there is no greenwashing or low greenwashing risk in a fund?
Sure. So I think, first of all, there's no shortcut in investing, right? So we have to do our homework. So a good thing is that nowadays there's better disclosure in terms of ESG, thanks to the enhanced regulatory developments in recent years. So I think the simplest way to begin is to read the fund offering documents, which now disclose details on a fund's ESG objective, how ESG outcome is being measured, and what kind of ESG research framework is being implemented. Or even we can look at the fund fact sheets to get a sense on whether the top holdings seem to align with the ESG values.
So on tools at Morningstar, we have many. Can you walk us through several of them that can help investor know better?
Certainly. I think that's a great question. I think especially because there's an ever-increasing amount of data out there, so it's important to make use of the analytical toolkit to empower our investment decision-making. And at Morningstar, we have two ESG-related ratings to support investors. So first is the ESG commitment level rating for asset managers. And the second is sustainability rating for a portfolio that would suggest the ESG risk of a fund. So first of all, for the ESG commitment level rating, it evaluates the commitment of an asset manager to ESG investing through assessing the company culture, the incentive scheme, the ESG resources, as well as the active ownership practice. And we have actually just published the latest ratings on 94 asset managers globally in December 2022. And the report is available on the platform, so do feel free to take a look. And second, on the sustainability rating, which is shown in the form of 1 to 5 groups, and it utilizes our extensive Sustainalytics research on companies to evaluate the level of ESG risk at the fund level. So briefly, 1 group would suggest the highest ESG risk, and then 5 groups would suggest the lowest ESG risk. But then investors need to be mindful that a portfolio of 5 groups doesn't necessarily mean it's a better portfolio than a portfolio of 3 groups, for example. So what matters is whether this rating is consistent with the investment strategy. And what do I mean by that is, let's say if a fund claims to invest in companies with a high ESG quality, then normally we would expect a lower ESG risk of its portfolio. But if there's a fund that focuses on companies with improving ESG quality, even though they might have lower ESG quality today, then it would be possible that the portfolio would exhibit a higher ESG risk. So These two ratings focus on evaluating the ESG attributes of a fund and its parent. And what's missing here is the forward-looking potential of a fund to generate alpha. And this is what our Morningstar analyst rating aims to inform investors. So we think to improve the chance of selecting a higher quality ESG fund, investors can try to combine these three ratings. So for example, they can try to identify some ESG funds with a Morningstar analyst rating of like gold, silver, or bronze, i.e. the medalist funds, managed by an asset manager with a good ESG commitment level rating, along with a sustainability rating of its portfolio that is consistent with its investment strategy.
Right. Thank you so much, Brian. For Morningstar, I'm Caitlin.